There are a lot of good reasons to add small cap stocks to your portfolio, but most of the popular all-world funds don't include them. The ones that do are more expensive, so it's usually cheaper to buy a small cap fund separately. In this video, I'm going to share a list of the cheapest small cap funds you can buy. As far as I know, there isn't a cheap single fund that includes small caps from both developed and emerging markets. So if you want to include both, you'll have to combine two different funds. Most of the funds I'm about to mention are based on either the MSCI World Small Cap Index or the MSCI Emerging Markets Small Cap Index, which together can give you truly global small cap coverage. I'll be including funds from four big names in the index fund world: Vanguard, iShares, SPDR, and HSBC. So first, the Vanguard Global Small Cap Index Fund. Despite the name, it's not actually global, so it only includes stocks in developed markets, and there's no emerging markets counterpart from Vanguard, so you'd have to combine it with an emerging markets fund from one of the other brands if you want emerging markets too. But it is one of the cheapest on the list at 0.29%. We can also have a look at what the fund's been doing in terms of its performance. And so what I'm looking at here is not whether it's been up or down in any particular year, but how closely it's tracked its benchmark index. So you can see here the net asset value is what the fund has actually returned, and then in blue you've got the benchmark. So we just want to check that it's been really close. These will not usually be exactly the same, but you want to make sure that they're within about 2% of each other. So in this case it looks like, yes, they are really close for all of the past 5 years, which is a good amount of data for us to check. If there was a big difference between either of these columns in any given year, then it would suggest that the fund was doing something strange, and meaning that it wasn't tracking its index as effectively as it should be. But this looks all good here because they are very similar for every year that we have data for. Next, let's look at HSBC. These ETFs are a relatively new offering, as they've only been around since late 2022, but they are the cheapest funds on the list at 0.25 and 0.35% respectively. Another interesting thing to note about these ones is that they're ESG funds, which stands for environmental, social and corporate governance, and also means they track slightly different indexes. These indexes are both based on the same indexes as the other funds, but they're constructed by selecting companies from the parent index with a strong ESG profile, and that means they exclude companies that are involved in controversial businesses. And in this selection process, a controversial business is defined as one that's involved in alcohol, gambling, tobacco, military weapons, civilian firearms, nuclear power, adult entertainment, or genetically modified organisms. Now, whether this fits your personal definition of ethical or whether you care either way is up to you, but it's worth mentioning. These ESG indexes aim to keep similar performance as the parent indexes, and we can check that by looking at the data which shows how they would have performed over the past few years. Note that because both these ETFs are too new to have actual data, simulated data is the best we have for now, so that's what this is based on. And we can see that the developed markets' performance is very similar, but the emerging markets has outperformed by quite a long way. Of course, there's no guarantee that this trend will continue in future, but it's interesting to see that so far, the ESG selection here seems to be showing more positive results. Next up, we have the funds from iShares. And here we do have enough data to see how the fund has been doing, so let's have a look. So starting with the World Small Cap ETF, so this is the one that tracks developed markets globally. We've got 4 years worth of data for this one. It'd be nice to have more, ideally 5, but 4 is fine as well. It's enough for us to see that these two bars, so once again the actual return and the benchmark, are quite close together, at least within a couple of % of each other. And so we can see that this is a reliable index fund because it's tracking its benchmark index fairly well. In terms of cost, this one is 0.35%. And so that's a bit more expensive, but still not too bad. So let's look at the emerging markets version. And this one's been around longer, so we've actually got a full 10 years of data here. And again, we can see that these bars are very close to each other, so performance has been fine as well. It's tracking its index, so that looks good. And in terms of costs for the emerging markets version, this one's 0.74%. I'm not sure why it's quite so much more expensive, but it is the largest of the emerging markets funds that I'm going to look at. iShares also have an ESG version of its developed markets small cap fund. So if you're interested in that, then I just wanted to point that out. It's a newer fund, so you've only got 1 year of data, so that's not really enough to tell us anything. But just wanted to point it out anyway. And that costs 0.35%, which is the same as the non-ESG version. So you've got the choice of either of those there. There is no ESG version of the emerging markets fund, as far as I know, though. And finally, let's look at SPDR. So this is the developed markets version. Expense ratio is 0.45%. And let's have a look at the performance. Okay, so here they're giving us two values for the fund, so net and gross. And I think net means it's going to be net of fees, but whichever one you choose to look at, you can also see that the columns are doing close enough to the same thing. And I think SPDR also actually published their tracking error. Oh yeah, there, so 0.2%. And remember, we're looking for that to be either plus or minus 2% in either direction. Anything inside that is okay, so this is fine. And now the emerging markets version from SPDR. So expense ratio of 0.55, and let's check it against the benchmark index. Again, these all look close enough, nothing too strange going on there. And their published tracking error is 0.34%, so a bit higher than the developed markets fund, but still well within the 2% that we care about. So because it's a bit tricky to compare prices once we have multiple funds involved, let's do a quick price comparison. I'm going to base it on a 90-10 developing and emerging market split, because that's roughly how the global economy is split between developed and emerging markets too. And from that we can see that HSBC still comes out the cheapest at 0.26% overall. Then it's iShares at 0.39, SPDR at 0.46, and then the Vanguard fund is 0.29, but remember that's just developed markets. So it would depend which emerging market fund you chose to combine it with. Of course, there's nothing to say you have to buy both funds from the same provider. You could also mix and match if you want to do that. If you need an all-world fund of large and mid-cap stocks to go with these small-cap funds, most of the funds I mentioned in this video would be perfect for that.